The press briefing for the 126th Monetary Policy Committee meeting was held on Wednesday, 17 September 2025 at the Bank of Ghana's Bank Square. Here are the key highlights from the MPC press briefing.
Growth has been resilient, supported by modest tapering of the tensions associated with the tariff wars, robust exports in the first quarter of the year, easing credit conditions, and fiscal expansion in some advanced economies. Global inflation is expected to decline amid lower food and energy prices, as well as a slowdown in employment growth. Global financing conditions have eased somewhat, supported by declining policy rates, lower long-term bond yields, and a strong rebound in portfolio flows to emerging markets and developing economies. On the domestic front, the economy continues to demonstrate strong growth, driven largely by the services and agriculture sectors. The bank's high-frequency indicators continue to point to sustained momentum in economic activity. Headline inflation declined further to 11.5% in August 2025, down from 12.1% in July, the lowest reading in 4 years. Fiscal policy implementation in the year to July 2025 reflected strong consolidation efforts underpinned by tight expenditure controls, although revenues fell short of target. The banking sector. The sector recorded strong performance over the first 8 months, with continued asset growth and improved profitability, asset quality, and efficiency indicators. The external sector. The sector strengthened in the first 8 months of 2025 with a significant trade surplus of $6.2 billion compared to $2.1 billion, which was recorded during the same period in 2024. The reserve position remains strong, with our gross international reserves at $10.7 billion, that is equivalent to 4.5 months of imports cover as at end August 2025. Compared with $8.98 billion, which was equivalent to 4.0 months of imports cover as at end December 2024. Now, on the back of the strong external sector performance and increased reserve accumulation, the cedi strengthened against the major trading currencies in the year to July 2025. Given the current state of macroeconomic conditions, the view of the committee was that inflation will continue to ease in the near term. And in the outlook, headline inflation is expected to drop to within the medium-term target of 8 plus or minus 2% by the end of the fourth quarter. However, the possible upward review of utility tariffs could exert some price pressures in the medium term. Notwithstanding this, maintenance of an appropriate monetary policy stance, strong sterilization efforts, ongoing fiscal consolidation, and adequate reserve buffers should sustain the disinflation process. Given these considerations, the committee, that is the MPC, by a majority decision, voted to lower the monetary policy rate by 350 basis points to 21.5%. The committee will continue to monitor macroeconomic developments and take appropriate policy decisions as and when necessary to reinforce the disinflation process. On the net open position limits for banks, the decision has been made for the single currency NOP limit, which has been plus and minus 5%. This has been revised to between 0% and minus 10%, which will be effective from the 1st of October 2025.